Welcome back. This is Business Week. I'm Tilewa Adebajo. My guest this afternoon, Olufemi Awoyemi. We're talking about the year-to-date performance of the equity markets in Nigeria. Femi is quite revealing because the speed with which we've moved through this sectoral analysis, there's not much left. And there's really not much here. The only thing here, the petroleum marketers. Is there something that you would recommend in terms of looking at investing in them? Because the reason why this is becoming quite interesting is that after you take a look at the petroleum marketers,
you're talking about AP,
yes, AP,
Capital Oil, who's not doing anything.
Corn Oil, Mobil, Oando, Chevron. You now find after this, there's just the publishing and printing, road transport.
Okay.
Then you have the foreign listings, and then of course the second tier. But the irony is that even we'll come back to the petroleum stocks in a moment and see what sort of pick you have. But clearly, out of a market capitalization, you have about 50 companies contributing to 90% of the market capitalization, and those 50 companies have a market cap of about 8 trillion. And out of the 8 trillion, one company, Dangote Cement, contributes 2 trillion of that. So what we find out is the fact that a lot of companies that should be on this market, they're not in the stock market. The market is quite limited in terms of choice and in terms of diversification, which is a key element.
The same argument you made was one of the reasons why Dangote came onto the market. We felt if companies like that were outside the market, it wouldn't help the market. They'll come to the market. But they do come into the market, and like a big elephant in the room, there's no liquidity in the stocks or whatever. It doesn't add more to the market. But maybe it's a curve we're just going through now. And so maybe in 2 years' time, when they would have fulfilled the 25% free float requirements, it should help the market. But the second point you made was that the companies that are doing well outside the market goes to the fact that there must be some reason why people would not want to come into a market. If the market does not offer you an advantage, there's no point in going to list in the market. And that's why companies, not just in Nigeria, remain private organizations, so they can make decisions, they can do better. If you take a look and says, if you compare quoted companies with private companies and said which ones are better run, which one give you better returns, you probably find out that the private companies are better managed and give better returns at the end of the day. So you're asking the question, why would they want to go in and take on the additional burden of regulation, both consistently or inconsistently, a market in which there's the trust deficit remains in terms of corporate governance within the market itself, in terms of where regulatory oversight creates some disconnect rather than sort itself out. And so if there's no attraction for them to be in the market, it's there. And I think that is basically where the next challenge lies for us. We were talking just before now, and then we said that Nigeria will be part of the next 11 emerging economies in the world. And it's even predicted that Nigeria by 2025 should be able to have an economy that's strong, if not stronger than South Africa's. And which tells you that where these projections coming from, they're coming from what you said earlier, that in terms of what the government might do. If the government is able, therefore, to do those things, it should trickle down back to the market. So what you find in the market here is a reflection, like I said earlier on the outlook of government policies. In terms of, let me give you one example. You remember Volkswagen, right? We had a Volkswagen, but then during Shagari's time, I think import licensing was given again. So you now find people, different kind of people, importing tires, which were challenging the Dunlops of this world, the Steyrs of this world, who were listed on the market. Now, instead of solving out the Steyrs of this world, raising money for them, the government policies went ahead and started doing what? Buying tires, importing Tata equipment, and so other ones. And
so even Michelin has closed down its factory.
So the government policies kills those companies. It makes it difficult for them to remain on as a listed company, and they step out to trying to survive on their own. And so they could also become a trading company. So we became more of a mercantile nation. A nation of traders, not a nation of producers. And so if you look at your sectorial analysis and you're looking at the companies that are doing well, they're your manufacturing still. These manufacturing companies are still doing very, very well. And
they're adding value.
And there are quite a couple of them out there who would want to come into the market. And I believe that is what this whole conversation in the market is all about right now. That under the new dispensation, how can we, first of all, stop all this rot, create some depth in the market, and then see where we go from here.
Interesting. Let's take your next song, and then we can come back and begin to wrap it up.
Okay. Just the Two of Us by Grover Washington.
Just the two of us, you and I.
Welcome back, Business Week. My guest, Femi Awoyemi, Managing Director, CEO of ProShare. Femi, interesting. So we're not there yet. Market is looking to correct still. But I guess people still need to hang in there. And what sort of external factors do you think we need to do in terms of getting the market much better? The dynamics, transparency, accountability, and making the market more attractive. What are you looking to see?
No, well, there's a very strong belief of those of us at ProShare that Nigeria remains a very good market and avenue for investment for all manner of ventures. I got a little data here from colleagues that says European IPOs have that sinking feeling. Plenty of IPOs still in the pipeline. The only things they're thinking of is that only lower prices will provide a fix. From India, public offers are not doing as well all over there as well. Most of the stocks that were listed back, a particular company listed at a 525 IPO price, is trading today as 260 of their price. It shows you basically that what we're going through in Nigeria is not unique to us. We, however, have a unique situation with our economic model, which is just a mirror with which you can look at your market. So for us at ProShare, we believe very much that, look, it's high time we get out of this single mono product market. We need to try to get ourselves to move fast on the work that's been ongoing in terms of the exchange traded funds. And for us to do that, we need to just sort out this market and deal with some of those corporate governance type issues that we've had in the past. And hopefully with the new management in place, they may be able to sort those out in that regard. And once we have that, then the market gets a little bit much more interesting. We can expect some interesting set of investors, not just portfolio investors who just want to come in and go with a drop of a hat when things are not going to. People actually want to invest in your economy, but they wouldn't want to invest in your economy if they cannot have some stable policies with which to project and to work on. And it goes back to the whole idea that the whole financial framework itself, in terms of the CBN, the SEC, and the Ministry of Finance, having some coordinated way in which we can have some clarity. And we seem to be somehow moving towards that. At least in the last few months and close to a year now, we've finally found some form of fair stability. The pessimism that's in the market is only natural. We just come out of a post-election. We've had the longest delay in fixing ministers ever. Oil prices are dropping. The fears that meetings and decisions are being taken by people elsewhere. We are not yet in the game right now. And those are those things that don't give you comfort to know what you want to do.
Creates a bit of uncertainty.
Yeah.
Well, I'd like to thank you very much for coming on the program this afternoon. And also thank you very much, ProShare, for providing us a lot of the research that we've used for this discussion and going forward, the collaboration between Business Week and ProShare in terms of supporting us in research. And we look forward to having you on the program and some of your people at a later date, probably towards the end of the year, to see if there's been some recovery in the markets. Thank you very much for coming, Femi.
Thank you very much.
I'd like you to introduce your last song.
Oh, Michael Jackson. We're close with Michael Jackson, Liberian Girl.
Whatever business you're in, have a profitable week. I'm Tilewa Adebajo. This has been Business Week.